We're seeing a ton of separation by asset class. So you may have a couple systems that may focus on fixed income, others in equity. And so this is creating challenges for managers because they're looking at two different data sets, managing multiple vendors. They're looking at managing two different technology skill sets that they need to have in-house. And so it's like duplicating the work for them. And I think as time has moved on, I mean, those were the challenges of maybe about 10, 15 years ago, and those technology stacks are still there. And when they're maturing, they're looking to do consolidation. So that's how they're looking to address some of those challenges. Striking the right balance between insourcing and outsourcing is a challenge for all investment managers. And I would propose that there's two primary areas that they need to focus on. Number one is the core competencies of the front office and evaluating what the investment strategies, how the firm is going to create value. And then once you have that layer down, then you're looking at the second part on how the outsourcing, whether it be trading, data, middle office, how that's going to be taken care of through an oversight model. And ultimately, you have to have, at the end of the day, you're still the fiduciary. You have to have the ability to process those functions, even if there's a problem with the outsourced provider. So you have to retain all those skills internally. As managers look to invest in private markets, some of them it's new to them. Some of them have some smaller components, smaller funds, but now they're looking to scale. But I think the key point for them right now is entirely just get into the market first. And even if it's on spreadsheets, we're looking at just the time to market is so critical right now at this point because everybody's getting into it. As time develops, you're looking at challenges with a maturity technology stack. You're looking at challenges with scalability and automation. And so all those things combined they're not going to change. And I think they're all going to face this over the next 2 to 3 years as the technology and operating model mature. They're going to lose out if they don't jump in and just get it done. And I think we're trying to do this hand in hand. You have to, build the products. There's a lot of complexities. There's a huge learning curve. You have to educate your clients. These assets aren't liquid. There's a life cycle that they have to maintain. And then you're looking at that education, of your clients. And so that adds time because then they have questions. And so as they're looking around and how to expand in the marketplace, there's tons of barriers that really are not there for public market instruments because everybody's familiar how they work. There's a lot of education that needs to be done up front. 10 years ago, when we were in consulting, we were doing vendor evaluations. And so we would bring out these spreadsheets and then and then we would compare an order management system for capabilities of basket trading, program trading, probably about 1,200 questions. As we're looking at now, it's much broader because firms are not looking for a vendor, they're looking for a strategic partner. And the service offering that the vendors have has now matured. And I think that calling them a vendor probably is, still an accurate term, but they're really looking at a strategic partner. And so we've started to use the term provider because even as some of the banks, if you've seen, they're getting into the software, the front office software, the middle office software, and they're offering a full, front to back service offering. You want to work with them, a partner that's going to build their capabilities over time, even if there's a gap in functionality. And this is important for your firm from an investment strategy perspective, then you want them to build that over time. And we've seen that invest, 2-3 years of product development with those vendors. And I think you're looking at really forming that strategic partnership with them and knowing that maybe their product roadmap is not where it needs to be now, but they will eventually get it there. Prior to engaging in a major digital transformation, there's tons of thought leadership out there. And I think what's unique from a unique perspective is going to be resilience, like building resilience. And so when you look at a transformation through the lens of scope, It's like, well, this is out of scope, this is in scope, but really the industry is changing so much that something that was in scope a year ago, may fallen out of scope, and now there's something new in scope that's coming in. So how do you build that resilience? How do you how do you pivot towards a new solution, a new technology? Because that very well may happen during your transformation. And eventually, as you move forward, even when you're done, have you reached the point where your organization is more resilient through, human capital? Do you have the talent? It's this innate capability to be able to adjust and pivot even beyond the transformation. So building and ingraining those skills, from human capital, technology, having a agile digital foundation, and also having risk management and cost optimization. All of those factors combined build resilience and give you the ability to adapt 2-3 years from now to events that we can't foresee.